Now, today we've been talking a lot about infrastructure developments in Africa and how they impede on business operations. And as Vikas Murray said earlier on, I mean, some of the shortfalls we're seeing generally in infrastructure such as energy is an indication of how quickly and rapidly Africa is growing. One of the more pioneering steps being taken by the Lagos state government in Nigeria is the Lekki Concession, where an axis of roads are being built along the coast and within the mainland of the city of Lagos to try to ease up on traffic congestion and just to make the roads more functional. But it's a tolling system and consumers and commuters have to pay. We're now joined by the CEO of the Lekki Concession Company, the LCC, Mr. Opu-lyo Oforio-Kuman, who joins us now from Lagos. Thank you very much for coming through. Now, the social case for road infrastructure maintenance is very strong in terms of dealing with congestion issues. The investment case, was it a particularly strong one?
Yes, we believe so. We obviously structured the transaction to the extent it became bankable and no doubt attractive for investors. And, you know, we were able to succeed in securing a 46.8 billion naira long-term funding facility on groundbreaking terms for Nigeria. And incidentally, we received the first disbursement in the fourth quarter of 2008, which you might recall was just about the time when the whole global crisis came about. So I think that itself is a testament to the robustness of the project. We certainly believe the investment case is strong, but it's fundamentally strong because this is a service-based project, and we believe that in addition to providing high-quality road infrastructure, as long as people can see that it's value for money and the services are there, we believe that people will pay. It's not the first time that people are paying for tolls in Nigeria. You know, we have a committed government that is very, very interested in seeing this succeed. And quite interestingly, since we've embarked upon this track, we can see that public-private partnerships, including in roads, are becoming more of a focus area for government at all levels in Nigeria. So definitely we think the investment case is strong.
Let's talk about that public-private initiative with Lagos State. I mean, this entire project forms the core of their infrastructure development program. But who bears the risk at the end of the day, especially when we're talking about funding? Has it been yourselves as the private entity or private sector, or the government come to the party?
Well, in terms of the funding, the private sector principally bears the risk. I mean, this is a BOT type, DBFO type structure, so we carry the financing risk. What is interesting, however, in the case of Lagos State, is that Lagos State contributed a 5 billion mezzanine finance loan facility as part of this project. And that was very, very important because it showed Lagos State government's willingness to have skin in the game, which, frankly speaking, was quite attractive to investors and lenders. So we carry the primary financing risk, but you know, the state has actually shown its willingness to be supportive. Besides that, risks generally, as you will imagine in a public-private partnership, are shared between the state and in our case, LCC. Naturally, we have retained risks or taken on risks where we believe we are best placed to manage. The state has taken on or retained risks where we think they're better placed to manage. For example, dealing with issues such as the clearance of the right-of-way, resettling people and compensating people who are affected by right-of-way requisitions and other things like that. And you know, there are various ongoing obligations. So naturally, the state has to continue funding its own side of the obligations.
Let's look forward, because what we know is, with a lot of talk and anticipation as to amendments in the 2010-2011 budget in Nigeria, the appropriation bill also led to some kind of funding shortfall for the Lagos State, and I'm wondering whether or not that's going to impact on phase 2 of the Lekki excess for road tolls, the coastal roads, the 20 kilometers that you're now embarking on with a diminished budget. How does that impact on you? Okay, I think we're having a bit of a technical problem in Nigeria. Vikas Mure, just your opinions on this one. This is a dynamic example of a public-private partnership working well in Nigeria, but people lament the fact that it's just 50 kilometers of road, and then in the second phase, 20 kilometers of road in this vast, populous country.
True, and one of the other things that you have to say is that it will probably work in Lagos, where development has outstripped infrastructure. But infrastructure, there are two ways to deal with infrastructure. On the one hand, you put in infrastructure where you've already got development, which is pretty much what's been happening in South Africa over the last year or two. And the other is to use infrastructure to develop certain areas. Now, the public-private partnerships where the risk is low because you know that it will be used, it's fairly easy to do in a place like Lagos. But in other places in Nigeria where you want to stimulate development, government will have to bear more of the brunt of the
Now, in
risk.
South Africa, we know that national roads are under the management of SANRAL with concessionaires, which is not what the municipal roads are structured under, that sort of arrangement. And they look pretty good, the roads. They're well maintained, quality control. There's often a view that once you remove the concession and you hand it back to the government, you're in deep, deep trouble in terms of quality.
That has been the case in the past in many instances, because what tends to happen is that the income from these roads tend to go into the general fiscus rather than to be applied to the road. So as long as you've got a concessionaire who has to earn his money from this and the money goes back to the concessionaire, you're pretty much on track. As soon as you put the money into the general fiscus, you might have prolonged periods of under maintenance.
All right, Mr. Oforio-Kuman, back to you. We've seen in the South African instance, for example, that with the downgrade of the National Road Agency creditworthiness, there have been some issues as to whether or not investors had an appetite of entering into public-private partnerships and the ability to raise money on the capital markets through bonds for some of these financing projects. We know of the situation in Nigeria and the banks. How are you raising your money under these conditions?
Well, like I said earlier on, we were fortunate enough to have secured our long-term financing lines in the fourth quarter of 2008. You know, we received, in fact, we've drawn down probably about 70 to 80% of the total funding. And we're in the process now of drawing down the local leg of that funding. So far, the banks have been there. And what we believe gives the banks confidence is that they can see that the work's getting done. This is by no means an easy environment to do this kind of project, but we doggedly and steadily continue to make progress. And the evidence is there, so they can see that their money is being put to good use. And of course, we also believe that they can see the prospect of recovering the same in due course. That being said, if I may say this, I mean, there's no doubt that the changes in the banking industry has had an overall effect on the ability of projects generally in Nigeria to raise funds, and whether that's from overseas because you've got the impact of the global credit crunch, and no doubt locally where we've had a lot of changes. But we personally believe that the changes ongoing in the market are the right things. It's important that confidence is established in the banking system. As from the point of view of a borrower, we prefer lenders who have had a good look at the project and who understand the project, and consequently have then made rational decisions to lend to us. You know, where you're not informed, you haven't properly understood the risks, at the slightest sign of trouble, there's a tendency to run, and that can destabilize projects such as ours, which require long-term funding. So we're great supporters of the changes.
Right.
We think the central bank changes will create stability in the market long-term. It'll help the elongation of debt tenors, which is what is needed, even though we were quite fortunate to benefit from 12 to 15-year tenors on our commercial tranches of senior debt.
Right.
We're not aware, though, that other companies have been so successful. But generally speaking, if you create the right environment, you have confidence in the banking system. And most importantly, you have projects that are well structured, they're robust and they're bankable with credible managers of those projects. We honestly don't see any reason why it will not be possible to continue to raise funds for such projects in Nigeria.
Let's talk about the commuter who effectively has to pay a toll, and you said earlier on that it's not the first instance in which Nigerian commuters have had to pay tolls to use the roads. And I can tell you anecdotally, in South Africa, there's a proposed toll between Pretoria and Johannesburg, which is 60 kilometers, and it's not a very popular move. But you work on a build, operate, transfer model, and there's often a fear that once you move the project out of the hands of the investor and back into state hands, there you're going to have serious problems in terms of maintenance, quality, service, and also the fee structure for the commuters. How are you accountable to commuters, and how are we going to ensure that that sort of standard of service you're offering is maintained? Because yours is a management process for 30 years and then back into the hands of Lagos State.
Sure. I mean, first and foremost, I would probably contend against the view that because the asset will eventually end up back in Lagos State, that the standards will fall. Let's not forget that we're talking about an event that will happen in about 30 years' time. Nigeria, and Lagos State in particular, is on a trajectory of growth and positive change. I would therefore really be disappointed if after 30 years' time, the status quo today would be the same, at that time. So I'm generally a believer in positive change. Of course, in 30 years' time, the state does have the option to ask us to continue, does have the option to bring in other private sector players if that's what they want to do, or certainly does have the option itself, if it feels that it is able to carry on. But there's another school of thought that says, is the role of government today about itself being involved in business, or should it be at the level of policy and regulation and allow business to manage? So I think in 30 years' time, there'll be an interesting discussion, obviously before the handover. But I wouldn't want to write off the state's ability to itself change and become better over time.